guys, so I just wanted to look at this large volume. It's the largest volume in history for Bitcoin, and in the past that was a big deal. Now this is spot price. This is the US dollar, Bitcoin US dollar. It's also the same on the USDT, Binance USDT chart. Now we do have this gap fill. Well, it's not. I mean, it's a bit of a volume gap fill. Of course, there's volume in there, but there is lower volume. So that is down there at, we'll call it 12,000 to be a rough number. But in the meantime, like you can see here, this large volume, it's huge. It is absolutely huge. I mean, we've never seen something like that before. What I wanted to look at is every one of these large volumes. What happened, right? Well, we'll go back to here, so we can see that it bottomed the market for, well, many months, since May, and here it bounced the market, and we continued, and we got, well, let's measure it just for the sake of it. I mean, from the very low to the very high. You're not going to catch the very low because you want it foreign, but you know, you could have bought a dip, for example, and let's just change this. I don't like that red there, just because you're bouncing, so it's better to be green. But you can see here there was a 34% bounce or a 40% bounce from the bottom, but eventually price did go lower. Like, it was a big volume, it wasn't huge. Now this was an outstanding volume as well, and what it did do, I'll just move that for now. What it did do is it stalled the price. We had many weeks then of consolidation. 4 5 weeks. 1 2 3. Well, the fourth week we actually broke down. Fourth week after in the consolidation we ended up breaking down. So the large volume again did stall the price, but it was not the low. Okay, it was not the low, but it was important. Now these large, this looks like more of a capitulation. Sometimes you can get two of these in a row. Okay, so that's important to keep an eye on anyway. This one right here, well, what happened? Again, it was very important in the market, even in the short term. Like, we got a bounce from it. We chopped about for 6 or 7 weeks or whatever that is in there, and then a pierce below that actually held, and Bitcoin bounced 100% or whatever we bounced there. You know, if you bought there 130% basically. So again, this volume was very important. I'll not count that one for right now. It'll just lengthen the video, and it's not as big as the rest of these. It's not outstanding. This one here, COVID, of course, we all know what happened in COVID. That was the second largest volume in Bitcoin's history right here, in the COVID crash. And what happened? Well, it did bottom the market, but the market structure bottomed the market. Why was it the market structure and not just the volume? Well, we came right back into the neckline. There was a lot of support in here. There was a lot of buying pressure in here. You can see this buy pressure right in here, and that's well, it's kind of similar to what we may be getting. Right, you can see that this volume gap was not filled completely. Of course, when we drop down here, this would have actually. Let's do that. So we let's see there. Well, you can see there that this volume gap was there, right? And this is important going forward, because we have a very similar situation right now. Okay, if I move that out, so we can see that there was a volume gap. It's skewing the volume. Yeah, that's better. Okay, so you can see that there was this large volume down here, large volume node, whatever down here. It's not the highest, but it's a large one right at this neckline, and price bounced up. But where did it come back down to? Well, it came back down to at least attempt to fill this volume gap. But what's very interesting is we didn't actually fill out the volume gap massively. Yes, we did come down into it, but look where the price stopped. Look where the price stopped, right? It came right down into the volume gap. It filled the volume gap and moved back up. It didn't actually fill out the volume too much. Of course, it did fill it a bit, but it didn't completely fill it out. There still was that gap there, but price stopped exactly on the volume gap. right? It's not a coincidence. It stopped right there. I know I'm getting a little slightly sidetracked, but we have this volume gap. So again, the history shows that this doesn't need to be filled out here, right? It doesn't need to fill that right out. But if price comes down and touches this, right, it touches there, well, it's a very good chance of being a good buy. Of course, price needs to get there, but yeah. So that's important, and it showed here we had a similar volume gap, and this one right here, and it did come right down to it. So it's very interesting. But that was the large volume here, and the large volume, of course, the capitulation volume helped bottom the market, but also the red 200 moving average, and also the neckline of here, and also the volume node of here. So there was a lot of factors in the COVID crash that actually supported the market. Now, if I keep going, was the last volume before that very important? Right, this one right here. Yes, well, it was, because it was the very top of the market. Right, it actually closed red just on the skin of its teeth. That was a green volume until the very last day, and then we kind of just flip red there. But again, it was very important for the market, because the market then crashed right back down to the neckline. Okay, so again, very, very important. The one before that, well, again, it bottomed with capitulation right here on this. We chopped about for a few weeks, but this is a weekly chart, and then we rolled over and into the red 200, and that's where we bottomed, right, on a pierce below capitulation into the red 200 moving average, just below this large volume. And what's interesting is that since the top of the market, right, there was no volume until you get a volume breakout, and that volume breakout was capitulation. So the last volume before that was here, right? Was this important? Well, it really was important, because for 6 months or whatever that is, 5th of February to November, about 10 months or so. So it was longer than 6 months, about 10 months or whatever that is. Price held that level, bounced off it many times, and we worked our way in. But eventually, when this volume broke, well, that was all she wrote, and the price crashed. So again, it was very important. Now this one as well, the one before that, what happened? Well, that was the breakdown volume. That was the top of the market. You had a bearish weekly stop hunt, and price created that bearish engulfing candle that actually dropped the whole way down to 10k. Bitcoin dropped 50% that week, from 20k down to 10k. Of course, it bounced again, but at one point it was down 50% in the 1 week. So the volume was very important. So every single, let's look back here. Now the volumes were a lot smaller back in the day, but they were also massive back in the day, right? And this was a run up, and the price crashed right down. It was very important because it created inside action for a long time, and then it got stop hunted. And once it got stop hunted, well, price moved up. But it had major implications on the market, and that's what I'm getting at. Do we know this is capitulation yet? We don't know if it's capitulation, but every other time in the market, a large volume like this was very important. It either bottomed the market or it supported the market for a long time. Support for a long time. This was breakdown volume, so that was kind of a confirmation that there was real sellers in the market, and topped the market, created a bear market. So that was important. This was supporting the market for a long time. Price went into a sideways consolidation. This bottomed the market below the capitulation and went into consolidation. This also topped the market, and we dropped 50% or whatever we dropped, more than that maybe. This one right here, well, that bottomed the market right here, and we bounced back up. Again, there was a buy just below that. This one supported the market for a few weeks, but we got continuation. It was huge, but it wasn't capitulation because it wasn't bigger than this. So it was large, but it wasn't outstanding, right? Then this one bottomed the market for a considerable period of time, and we broke down again. But again, this one wasn't huge. It was just a large supporting volume, but it was not capitulation. But this one is, well, it looks like some sort of capitulation, But you know, we need to watch, we need to be reactive, we need to see if potentially we get some sort of bullish stop hunt below this, right? And you don't always just get a bullish stop hunt, right? You know, can we get that? Is this volume going to be strong enough? Part of the problem is the you know, this gap is not all filled yet, so it makes it a little bit tricky. Sometimes you get two of these volumes in a row in a bad crash. The other thing I will say here is, though, the 2 week has not really created a huge volume yet, but we have another week left, right? We do have another week left, so there is the chance that this could be a capitulation volume at some point, or at the end of the week, I mean. And you can see there, I drew this down a little bit down to pierce the lows, and that would be into the red 200 moving average on a 2 week chart, right? When I go to a weekly chart, right, you can see that this doesn't quite fill all of the volume, right? But on the 2 week chart, you know, a pierce below there would actually be touching the red 200 moving average on this, right? Right in there, because this is a lagging indicator, and when this moves up, if the market bounced, it kind of would curl up slightly and would come into price. So initially it may look like it's not going to touch it, but later on it will have looked like it touched the price. So what I'm getting at is, at this point in time, we do have a capitulation weekly volume. Now what does that tell us? Well, it tells us, and you don't always get it, but because of the volume gap, it's given us an indication that Bitcoin might be trying to bottom, right? Attempting to bottom at least. And if we can get pierces below this large capitulation volume, that might be a point that we need to be looking at buying. Because it's capitulation on a weekly, at least it's a huge volume, the largest we've ever seen. The red 200 is below here. The 12 month, look at the 12 month 9 EMA is just below it as well. So if we got any more sort of pierce down as well, that would be down there. The 3 month, nothing special there. What could we look at there? I suppose a pierce lower would bring us into this previous high. But it's not just a previous high, it's the open and close here, right? And touch here, which would a dip pierce down here would be kind of into that level as well. So it's a big level. Anything on the 6 month chart? Kind of similar. Of course, we are red on the 6 month, we are red on the 3 month, we are red on the monthly. Let's look at the monthly actually. Did we look at the monthly yet? Okay, so, you know, but a pierce down here, it still leaves this little bit of a gap here. You know, so to be honest, we would like to see this gap filled at 12k. I would feel more comfortable. And what I like about that gap fill is that it is, if you see here, it's a pierce below the red 200 moving average on a 2 week chart. That, you know, to me that's fantastic after an 84% drop. And it's the fill of the large volume, right? That would be fantastic. Now, if you remember what happened in 2008, let's go and look at that very quickly. And I need to cut this video off, it's a bit long here now. But look what happened. We came down into the red 200 moving average on an 84% drop, right down into that. Okay, so that was very important. Is Bitcoin doing the same thing now? But because this was earlier in the cycle, right, in Bitcoin's growth cycle, I mean, you know, you better to focus on the weekly chart, because the red 200 moving average just formed on the chart, right? So that's very important. But the cycle now is 4 years later, or whatever that is. You know, where the cycle is growing, and we are now in the same situation, but only on a 2 week time frame. And the last time when the red 200 moving average formed on the chart, it held and supported price. Now the 200 moving average is forming at the bottom of this volume gap. So any touch and pierce into this red 200 moving average at this point in time, we have to kind of assume that that will be a market bottom until proven otherwise. And also, it's the same on the 2 week chart here on the total market cap. You know, another flush down into that area would be a pierce of somewhere down in there, right? And basically that's filling this volume gap out as well. Look at this gap. I know it's not quite as nice a gap as Bitcoin chart, but it definitely is a decent gap nonetheless, that price can drop through it, at least to that first gap, right? At least to here, right to there. And when we start getting into that level, that's going to be very interesting. You know, I just extended that line on out, but you can see where this is. It's coming back into the previous top here. So that could be very powerful. You know, one more red 2-week candle to the downside. Something like we got last week. I don't know if we can get it again. You know, can we get it again? The FTX thing's subsiding, but of course there's going to be knock-on effects like Crypto.com, Hobie, and whatever else. So, you know, a drop like that would be nice for buying. Also, see the breakdown here. Well, the breakdown here, it took 2 or 3 weeks to break down completely, kind of implying, you know, we need to be prepared that, you know, we could get more downside here. Sorry for the long video, but last thing I just want to talk about, let me delete all this stuff, is if you remember back in the last cycle, look where we bottomed. We bottomed on a pierce below the red 200 and the purple 200 moving averages. Yes, we did break below that, but that was the bottom. And then what happened? Well, the pressure cooker started to develop. Right, look at this. The pressure cooker started to develop, and the total market cap is a weekly chart, by the way. And from there, of course, we bounced back into the white 100 and consolidated along, and eventually we broke out. Now, is that showing us that it possibly could happen again? Well, it definitely is. Like you can see that the drop here, but also if I go to Bitcoin here, you can see the red 200 down here. So it implies that a similar thing is happening that happened back here, but it's happening on a 2-week chart now. Anyway, sorry for the long video, but it is important. We are getting into crunch times. You know, the market has been hairy. It's been a pretty rough bear market, but hopefully we're getting close to the bottom.